welcome everybody. Happy Tuesday here. Welcome to the Closing Beat. This is our show where we cover the stock market, the good, the bad, and the ugly. We're financial advisors here at Jazz Wealth. We'll work with anybody. We are trying to make this whole industry different by saying, look, if you just have a little bit and you're just getting started, you should get the same advice, the same service, the same products, everything as the big wealthy investors. So that's what we're working on here at Jazz Wealth. Feel free to check us out. By the way, our class this week for customers, Wine and Wealth, is going to be on the stats of your weekly contributions. Some really geeky stuff there. Also, check your email. We did an email yesterday that went out about why we're going to go down in the stock market. Gave you all the stats behind that. And there's a little secret coming. I'm really excited about it. Less than 2 weeks away for our customers, but that's enough of that. Let's get started with the markets here today. The Dow lower by 300 points. Actually, what happened last night, there was some news that came out of China that their economy was slowing down to the lowest in about 30 years, actually. So a really negative number that came out, and that put the Dow down about 150, 170 points overnight. It put the S&P down about 15, 16 points overnight as well. So we sort of started with that. Already negative pushing into Tuesday on our holiday shortened week here. So you got the S&P down 37, the Nasdaq down 136. Really not that big of a deal in the grand scheme of things considering how far we've rallied. Here's the S&P on the chart there. You can see that technical traders also have good reason to sell. That's that bold red line that you happen to see right there. It's known as technical downtrend resistance, and that's a great reason for people to take profits in the short term, and you kind of saw that today. Add a little bad global news, a little bit of political news, a little bit of media influence scaring you guys, and that makes an even better reason for people to take profits in the short term if that's really your game, if that's what you're playing, right? We're not short-term investors here. We are long-term investors, but like to point out the day-to-day action there. The Dow looking very much similar here, still in a downtrend, yet to get above the 200-day, and the Nasdaq 100 pretty weak here today. 2 percentage points lower on the day. Now, after hours here, you did have IBM report earnings, so the Dow, a little bit, right? So IBM a little stronger. They beat on earnings, they beat on revenue, they beat on guidance. So sort of the triple whammy there if you happen to follow along that. In the Dow, if we take a look at the individual stocks in there, Caterpillar weighed on you today, Boeing weighed on you, 3M weighed on you. Those all three accounted for more than 100 points to the downside for the Dow. So if you're kind of wondering, what's going on there, those three stocks were some of the ones that pulled you a little lower. Hey, it's a big week for earnings this week, so we got a lot of stocks that are going to be reporting earnings. However, this is not the busiest week. We still have a couple weeks left to go until we get there. We'll keep you posted, of course, but if you're a short-term trader, mid-term trader, or you just want to know how your company did, you're going to find out here in the next couple weeks how their earnings go, and we'll try to cover it in as great a detail as we can. All right, let's look over to individual sectors here today. The price of oil down 2%. It had a decent run. Remember, it's stuck at the 54 level. Actually, I'm going to try to just draw a little line here. I don't know how successful I'm going to be so fast here, but we'll draw a line. We talked about this 53, 54 area. You can see it there. It's actually unable to get over that. That's the price per barrel, by the way, if you're following along. Current price per barrel is right around $54. Well, 53 today. So the price of oil still struggling a little bit. And then if you look at anything related to that, your oil transportation companies, your oil service companies, your drillers, refiners, things like that, all had weaker days. They led the downside today looking at the overall sectors in the market. Semiconductors a little bit lower as well. You've got Texas Instruments. Did I get that right? Texas Instruments reports earnings here tomorrow after the close, so that will be a big mover on Texas Instruments. On the semiconductors, a little bit lower there. Retail stocks pulling back. Again, take it into consideration. Look at the moves that these things have had since December 26th. They've rallied really strong. So if we do pull back, not a problem. Our customers know exactly what happens in the future when you see this sort of movement. We studied all of it. By the way, it was a great video. I kept it really short, but we studied the entire length of the market to see how often has this happened, and specifically what happened afterwards. Energy stocks, of course, lower on the day. Communication services stocks lower on the day, sector-wise. Home builders, you're going to see that in there. Let's take a look. Home builders down about 2% on the day. You got slowdown in existing home sales. You've got a slowdown in the price increases of homes. Not to mention, remember we've talked about Sherwin-Williams showing a little weakness, Home Depot showing a little weakness fundamentally. And so that helps to kind of way down on these home builders or home-related stocks. Now, a lot of analysts think that the home building sector and the real estate sector has pretty much hit a bottom. Reasons for that, last week we pointed it out, strong uptick in the number of people applying for new mortgages, really strong uptick over the last 2 reports, and then also interest rates stabilizing out a little bit. So a lot of analysts are sort of calling for a temporary bottom here on the home building sector and home-related stocks. That's all I really have there. Everything was pretty much negative on the day. I tweeted out earlier, it's bad, the markets are having a bad day when the best performing stock in the S&P 500 is a company that is literally planning on filing bankruptcy. That would be PG&E, symbol PCG if you're following that, up 6.5% today. Lots of action over there news-wise. eBay, second best performing stock. Remember, I'm not an I told you so guy, I'm an I'll tell you ahead of time guy, and that's exactly what happened there on eBay. It helps to have a little good news kind of float your way when you happen to feel like you've bought the bottom of a stock. Elliott Management, don't hold me to that name. I can't remember if it was Elliott Management. I read this earlier today. They announced a 4% stake in the company. Investors love that because there's the feeling of the plan of a turnaround here and kind of trying to fix some of the underperformance that you've seen in eBay there. If you want to know more about the technical charts, I'd kind of invite you to look back last week to see kind of what we were talking about, why eBay was a little bit weak there and looking like it was ready to bounce. Stanley Black & Decker, not a good day. 16% to the downside there. They beat earnings by a penny. Was it a penny? Yeah, $2.11 earnings per share, $2.10 was expectations. Revenue basically expected. Company lowered their forward guidance. Not good. You don't like to see that. And basically, if you look at the price of the shares here, it's a wide range, right? Since about late October, just a back and forth range, very much directionless, and the earnings announcement today doesn't help people make up their minds. Halliburton Oil Company, a little bit lower on the day. Earnings and revenue better than expected. Their North American business here came in less than expected, and that weighed on them a little bit. After hours, you got TD Ameritrade. I believe it's a little higher after hours here. They beat on earnings, they beat on revenue. And what was interesting, if you look back, what a lot of people wanted to see, myself included, I'm just kind of nosy. People just wanted to see the average trades per day. So they report their average trades per day, and they give you that metric sharply, sharply higher. Why do you think that is? TD Ameritrade, very much a retail, well, for the most part, a retail brokerage firm. And what do you think people did through October, November, December? Do you think the retail trader was very comfortable and not willing to buy or sell positions? No, the retail trader was very scared and obviously sold a lot of their positions. So that gives you a little bit of confidence that if you stuck in there, you did the right thing against the grain. They obviously made a ton of money in trading commissions over there. And hey, good for them. They deserve it. It's a good product. There we go. Okay, Facebook and Twitter. Well, you know what Twitter's symbol is. TWTR is the symbol. Both of them lower on the day. The Wall Street Journal actually reported that Russia says both those companies are breaking their the Russia's country's data laws, and just had a little bit of. Actually, when the report came out, the stocks really hadn't moved at all. I think if the market was flat today, the stocks would have basically shrugged that off. Wasn't really a big deal. Cisco in the news. Barron's said the stock should benefit from serious growth ahead for the company. People just like reading the Barron's over the weekend, so when you come back from a long weekend, there tends to be a flood of articles that came out from them. So they're basically bullish on the stock. Fifth Third, I'm going to go through a couple earnings here just in case you are participating in them. Fifth Third Bank's up 2% today. They missed their earnings forecast. Other than that, not bad. Company's not doing too bad there. It's a little overbought in the short term if you happen to follow along. If we stick with sort of the same category here, Travelers, a little bit lower on the day. Missed earnings by 10 cents? Missed earnings by 10 cents. $2.13 expected. $2.23 was expected. $2.13 is what came in. Revenues basically all as expected there, so not too bad, just a little downside. Johnson & Johnson a little lower. They beat earnings by a couple cents. They beat on revenues. They just didn't guide very much. They didn't guide higher. They basically just kept everything the same. They do that. They're not one that upgrades their guidance very often. They're more slow and steady, and you know that. It's a big stock. Logitech beat on earnings as well, stronger revenue, and they raised guidance. They got almost a 1% pop on the day. You know, not very much there. Did I cover IBM? IBM higher? Yeah, I did cover IBM. They beat on all three, earnings, revenue, and guidance going forward. So very good. Very, very, very good. The tweet made you chuckle. Yeah, I tweeted out a couple things today. Showed a picture of the new studio, by the way. Busy. Busy day. Yeah, it's definitely a profit-taking mode. There's, I think, a lot less fear than what the media sort of leads on to be. Look, everybody always wants to find a reason for the markets to go lower or higher. In reality, if you're a day-by-day trader, that matters. In the long term, you're just trying to sniff out what's on the horizon. You know what I mean? And I think, honestly, I've said this for a while, if what's going on in China really starts to make front headlines here, we could be in some trouble. I don't know how much data you follow in China. I thought about including it in our new, oh, I almost said it. I'm sorry. It's a secret still. But it's not good over in China from many different metrics. Look, there's a billion, billions of them over there, so they can afford a little bit bigger of a slowdown. But boy, they got to get their act together over there, and the data that came out last night was not good either. Okay, that's all I have for you. Just wanted to keep this one really short today. Trying not to just talk and ramble as much as possible. I know that doesn't do anybody any good. If we helped you in some way, maybe you'll hit the subscribe button, of course. And if you have an advisor who's not paying attention to you, I won't say the name, but a person came by today and kind of had that conversation. They're like, I'm just not getting the attention that I think I should be getting. I'm not getting any updates. I'm not getting any education. And look, that's what we're trying to do. So whether you have just started and you want to get going here for the first time, or you're someone who's experienced, you've saved up a lot of money and you just aren't happy with the people you're working with, that's our goal. We want to help you be happy with us over here at Jazz. So check us out, jazzwealth.com. More good things coming. I promise not to slip up next time. And look forward to hopefully announcing something by the end of the week for our customers. Really cool. I'm super excited about it. And we'll talk to you soon.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.